The next question will be, what is the primary reason to invest in Southeast Wisconsin? And this was started to be discussed by many of the panelists, but I'd like to dive a little more deeply into that. We have 4 areas that we're looking at here. The macroeconomic fundamentals of Southeast Wisconsin is one. The second one is real estate fundamentals, so it's not just the macroeconomics and job market, it's more real estate narrow. Third is searching for higher yield. I think that's pretty clear. And the fourth one is might be a little less clear to some of you, is searching for the next 18-hour city. The Urban Land Institute came out with their emerging trends, and they had the 24-hour city that came out in I think 1986 that was open for business 24 hours a day. And then they looked at the 18-hour cities, circling cities like Charlotte and Portland and Austin, Texas, as well as Nashville. So is that, or is it something else? I'd like to have you speak to what is the most important to each one of you, and give us a little greater detail about it. If it is higher yield, what is it, and how much of a difference is there with that? Let's start with Richard.
Well, I think for us, it's I would probably say it's real estate fundamentals. It's somewhat higher yield, but what we have found is in the Milwaukee market, we're able to find great sites for development that we couldn't find in larger markets that are much more competitive, much more expensive. So in Milwaukee right now, we have a fantastic site right on the river. We have a site that's across the street from the preeminent mall in the entire state at Mayfair. We have a site in Brookfield that is a very premium suburb that would normally be very difficult to get entitlement for. So what we have found is really great real estate. And so from a fundamental standpoint, yes, the yield is a little bit better, but I think really the quality of the real estate is what's making the difference for us.
Great. Chris?
So for us, it's I would say it's yield, but it's definitely a combination of yield and real estate fundamentals. It is the opportunity for that yield. We have a city that is pretty business friendly. There's TIFs out there. There's incentives for developers that help your yield. And on a cap rate perspective, you're 50 to 100 basis points better from an investment typically in some of these tertiary markets and secondary markets. So for us, it's really opportunity driven, which boils down to yield. There are some markets where the real estate fundamentals are so off that the yield is irrelevant, but those are few and far between. There's more in the secondary and tertiary markets where the fundamentals are pretty solid and you have the opportunity for yield.
I think real estate fundamentals are probably primary, but a number of the other factors that were mentioned in the survey, I think, also affect that aspect of things. And nobody's touched yet on the 18-hour city concept, but we think that's pretty important because the ability for a city to be a vibrant place is obviously a positive impact on the real estate fundamentals because it smooths out the cycles, it provides ready access to additional tenancy and absorption and retail life and the kind of things that are going on here in Milwaukee. So to the extent, and I mentioned earlier in one of my comments about the civic investment in Milwaukee, that we think that's really significant and really important because that serves to be business friendly. It serves to be a kind of a partnership with real estate owners as far as continuing to improve and maintain the environment. All those things serve to solidify the real estate fundamentals, and when you solidify the fundamentals, yield should follow.
Great. Matt?
A lot of talk about yield. Obviously, everyone's looking for it. We believe yield compensates you for risk, so we're looking for a dislocation where we believe that cash flows are mispriced. We believe we found that on some smaller deals we've bought up here, primarily credit medical deals that we've done in the area, not in downtown Milwaukee. But With the post office, I mean, really, we believe Milwaukee is a great city, and it's going to be on the verge of becoming a great story of a re-urbanization. And it's happened, obviously, over the last 10 or 15 years in the Third Ward, and we think it's going to continue to happen. We've had a front row seat in Chicago to watching it happen in Fulton Market, where, 5 years ago it was all meat trucks, and now, it's got Google's headquarters there, and it's just been an unbelievable story there. We think the same thing can happen along St. Paul there and with the Third Ward in Milwaukee, and it's a little bit of a macro just bet on believing in what's happening with downtown Milwaukee.
Great, thanks.
For me, it was pretty much all of the above, with the exception in the industrial sector, the 18-hour city. That was really somewhat irrelevant to us. But in addition to that, we found we were chasing, because we're chasing yield primarily. One of the other factors here in Milwaukee being a secondary city, and no disrespect intended, that we had less competition in having an opportunity to purchase a portfolio of size. We bought 1,700,000 square feet in 10 buildings. And that's not to be discounted, because there's so much money out there chasing deals. And then if you're looking at deals in the major markets, I mean, it's a beauty contest. You're maybe in competition with 15 or 20 other real estate firms. So having less competition was important here. And one additional factor for us, and this is without throwing necessarily CenterPoint properties under the bus, we had a dysfunctional seller. So we bought a portfolio where it was almost 30% vacancy. So we were chasing vacancy wherein there's opportunity, and so that's always an important factor for us, where we think we can do better than our predecessor, and for various reasons.
Great. I'd like to come back to Richard and Scott on a follow-up question. Both of you put as primary kind of the real estate fundamentals, one being apartment, one being office. I'm sure the attendees here would like to see, what do you see in the fundamentals in those spaces? And if the rest of you have some add-ons, I'll ask that of you, but I'd like to start with those two first.
Well, I think obviously our business is driven in large measure by macro events that are going on nationally in terms of the demand for housing and the rotation into rental housing versus for sale. I think we peaked at 69% home ownership. I think we're down to about 63 right now. So that rotation is obviously in aggregate being very influential to our business. But as it relates to Milwaukee, we're also focused on the continued migration into the city and into what we refer to as sort of suburban nodes of activity. So I think sort of the roadside apartment development that's in a random ex-urban or suburban location, you're not going to see much more of that, or it's going to be greatly reduced. I think most of the activity is either going to be infill in town, or it's going to be in the suburban activity centers. And so a lot of our investment strategy here has been consistent with that macro process.
Great, thanks, Richard. Scott, anything to add?
Yeah, relative to the fundamentals, a major attraction to us is the relative lack of volatility in this market, and part of that's driven by, I think, the ability, I'll talk specifically about, say, the downtown office market, the ability to add huge amounts of supply in a relatively short period of time. We've experienced that in Chicago in many of our investments that can destabilize a market when a couple of 1.5 million square foot office buildings come out. That creates a major impact that ripples through the entire downtown area. So in Milwaukee, the relative stability over a long period of time, I think, all you know this better than I, but over a long period of time, rental rates move within a fairly narrow band, occupancy moves within a fairly narrow band. Now that impacts our underwriting in many cases, because we will project lower rent growth or more modest rent growth as things go forward in order to value a particular property. But the relative lack of volatility and, I'd say, inability to add huge destabilizing amounts of supply are very attractive to us.
Okay, so walkable neighborhoods being one thing, and kind of that move towards the city, as well as the lack of volatility in the marketplace, seem to be interesting things. But anything else to add, Chris?
Yeah, so from a retail perspective, Milwaukee follows suit to a lot of strong retail fundamentals in other markets. The lack of new construction for large retail projects on a global basis has been a real driver in stabilizing real estate fundamentals. I mean, when's the last time anyone, you go anywhere, has seen a new enclosed mall built out of the ground or a new Walmart supercenter, large shopping center built? There's very few and far between. So what that's done is that's caused, not only in Milwaukee but in other places, large absorption, which has enabled people to drive rents, which helps yield, and that's happened in Milwaukee. And you couple that with the fact that since there's been, pretty flat retail sales for years and a lack of new construction, retailers are starved for growth. So one of the ways they do that is to open new stores, and we're seeing a lot of new retailers in the market, right? You have Nordstrom just opened their first store. You have Ross Dress for Less coming to the market. We all saw the Kroger invested a lot by purchasing of Roundy's. So you have retailers spending dollars in Milwaukee, which directly supports any retail developer or any retail owner, which goes to the strong fundamentals of the retail in the market. So that's obviously a major decision in any place when we're putting dollars in a retail project. So.
Great. Quick follow-up by Scott, and then we'll go to what you
One thing to
respond.
add that I think is implicit in all of our investment decisions but hasn't been mentioned explicitly yet is the ability to acquire in Milwaukee at a significant discount to replacement cost. And that provides an investor obviously a lot of comfort relative to the ability to bring new supply on. In many other markets, primary markets, the costs the values going in are approaching replacement cost, which gives investors pause. But in Milwaukee, even when it does damp down the new supply, but the discount to replacement cost is a very attractive aspect of investing here.
Great. Thanks, Scott. And what did you all have to respond to this question? And it looks like searching for higher yield. About half of our panel, I thought, were searching for higher yield, but the other half were really looking at the real estate fundamentals of the area, which was maybe a bit of a surprise to you.